this trade-off that the Fed is facing, financial market stability, financial system stability versus the fight against inflation. At the same time, you have the likes of JP Morgan's Marko Kolanovic saying that the risks of a Minsky moment are nearing for the markets. How close are we to that kind of instability, do you think?
I wish I had an exact answer, but certainly I think the risk is high, let's say, and I think we should be doing everything in our power to stop that. I think, we know that these initial problems or bankruptcies, failings can snowball and cause much larger issues based off if there's a dramatic downturn in asset values. And so I think just being able to stabilize it should be absolutely #1 priority for the Fed, and ahead of inflationary, recessionary issues. I think stability in the banking system should be #1 right now.
Are you finding compelling reasons to perhaps look at either US regional banks, US big banks, or European banks at this point?
Right. So whenever we have, we hear these numbers about down 62%, down 40%, people sort of wonder, well, is it time to jump in? I would say when there are so many unknowns, when we haven't hit that point of stability just yet, we're talking about what are the next steps, certainly what's the Fed going to do at the next meeting, what's happening in Europe. I think the best thing is to stay away from these. And certainly, if you have exposure, I'd say just take the losses and reduce that exposure. I think that there's, if you're just looking at quality, I think there's definitely a stronger banking situation in Europe. But again, we really don't know how it's falling out. There's sort of, a new headline and a new development every single day. And so I would say this isn't the point where I want to get in, but I am looking at when they look to become value buys, but it could be several months before we really know the final fallout.
So how do you stay invested in this environment?
One of the things I've been looking at is, one, I haven't been heavily invested in banks in any case, but some of the things that still look good to me are trades that are focused on tourism and luxury. I've been specifically looking at European stocks, though not as much as the UK, but more continental Europe. I like Ryanair, LVMH, Amadeus IT, all very great quality names. And the European stocks really have been outperforming a lot of your broad markets. Also, the past couple weeks, we've seen a nice pop in some of your quality tech names. So some of your big names like Adobe, Meta. I think they still have some room to run, though they're starting to hit their sort of high valuation point. But we've seen sort of the mega cap, the large cap quality growth tech stocks really being able to outperform and do well the past couple weeks.
Erin, we have Bill Ackman tweeting right now, a substantial tweet coming out saying that the Federal Reserve should pause on Wednesday. We have had a number of major shocks to the system, 3 U.S. bank closures in a week, wiping out equity and bond holders. Of course, you can check out that tweet right now by Bill Ackman. Erin, what are your thoughts? I keep hearing some conflicting opinions on whether or not the FOMC should pause or not, because even a pause could give the wrong impression to the markets that the Fed is blinking.
Well, as I was saying, I actually agree. Like I said, I think that everything should be done to stabilize the situation, meaning don't raise rates. Let's get those bonds and to be able to stabilize those bond prices. So I think raising it by 25 bips and making, obviously depreciating some of the other assets would be one of the worst things that they could do. So I agree that I think stability right now should be the #1 priority over inflation and fear of recession going farther ahead. So in that case, I don't think it's going to give the impression that they're done. I mean, we know that we still have over 6% inflation in the U.S. And so we know that those rate hikes should be coming if we don't see those decreases. But getting that 2-month pause, just because we don't have another hike in the next meeting, but getting 2 months where rates are stabilized, I think would really help get the banks, get the deposits shifted and just get that stability out there. So I completely agree with the tweet.
In the meantime, given the expectations, we have seen the dollar fall to a 1-month low, of course, which will have implications for emerging market assets, especially across Asia. Do you stay invested overseas, and are you still exposed to that reopening play in China that's been going on for a while?
Yes. Yeah, they've actually still been doing well, even with the downturn of the dollar. So it certainly hasn't hit its lows that it did in early February. It has, sort of come down off of the peaks that we saw about 2 weeks ago. But even in the face of a weakening dollar, a weakening euro and strengthening dollar, we're still seeing those European stocks do very well. And even in the face of, China and maybe reopening not happening as quickly as possible, again, the outperformance is still there. And so I think even when they've had down days, the down days haven't been as bad as what we've seen in the US. And so I think just from a value proposition, you're just in a safer bet when it comes to some of those really high quality European stocks.